Today will be part one of his series. Today is Tuesday, September 27th, 2011. Thanks for joining us this week. I'm Tim Staunton. I'll be hosting today's program. Today we'll be joined by MF Global Senior Market Strategist Tim Haberkorn, like I said. Tim will start off this webinar series with a discussion on creating a trading plan. If you'd like to ask any questions during the presentation, please use the message box on the right-hand side of your screen. Today's webinar is part of our ongoing effort to educate investors and traders about futures, and if you'd like to be notified about similar events, please register at the link you see on the screen. You can stay in touch with MF Global through Facebook, YouTube, and Twitter. Please feel free to check out our archived webinars at our blog at letstalkfutures.com. Please also feel free to subscribe to our channel on YouTube. Tim will eventually have his own section on letstalkfutures.com where you can find this webinar series archived if you miss anything. Tim is a senior market strategist. If you're interested in trading futures with him, we do have a special offer of half-off commissions for 30 days when you open a new account. Please keep in mind that today's program takes place at a specific time, and any opinions or recommendations given by Tim can be changed without notice at any time. Futures trading involves substantial risk of loss and therefore is not suitable for all investors. And of course, past performance is not necessarily indicative of future results. Today's webinar will be about 20 minutes. Tim will spend most of his time on commentary, and once he has completed it, he will take your questions. Again, please use the IM box in the corner of your screen to submit questions throughout the presentation. Tim will answer questions at the end of the presentation. Staying conscious of your time, we cannot guarantee he will get to all your questions, but he will handle as many as possible. If Tim doesn't get to a particular question, we do strongly encourage that you contact him directly. Please jot down his email and phone number now, or we will have it up at the end of the presentation. This webinar will also, like I said, be archived at letstalkfutures.com, Webinar Archives tab, so you can revisit this if you missed it. On that note, I'll go ahead and pass it over to Tim. Appreciate you joining us, Tim.
Thank you, Tim. Good afternoon, everybody, and welcome to Markets on the Move Educational Series Part 1 here. We're doing something a little bit new here with the webinars, and they asked me to step in and do an whole educational thing on the trading and different parts of actual, from beginning traders to beginning when you first get into a trade and understanding everything that goes along with the trade until you get out with either a profit or you get out because of the risk reasons. And I'm going to cover a whole broad of topics to help people tweak their trading and tweak if you have a system or if you're trading with someone or what have you, whatnot, so you don't miss important tools that could help you be profitable in the markets. Today's markets, obviously, that we're seeing lately, obviously have been very, very volatile. And being a broker and working with retail clients, as far as helping them, assisting them with trading in their account and making trading decisions, I see this, God, 99% of the time. People come into it and they come into trade and I talk to them about their other investments too, and they go into, if it's a stock account, commodity account, whatever, and very few people have a trading plan. How you want to look at this is, and the slide says it right there. Would you start a business without a business plan? Would you start a business without that roadmap? Same thing. Same principle applies to trading, and I can't begin to explain how important for an individual that is, and having something to follow to help you make good decisions and at least to correct the ones that are bad. Trading is can be very intense, and it could be one of the best things, the funnest things you'll ever do, and it could be one of the most miserable times of if you don't have a plan and if you're sort of just trying to wing it. Every client that I work with, the ones who choose to be more more hands-on and are there also to, everybody's here to make money, bottom line, but ones that also want to sort of learn and they want me to show them, the decisions and how I make the decisions to go about my trading. I do that. I send out the emails, about with the markets that I'm looking at with my own research on my own charts, explaining what I see coming out of what's happening today. And it's creating a plan of attack for what we're going to do tomorrow. And that's why by the time that the trade comes up, a lot of the times, with the actual technical planning of the trade, I try to keep the thing outlined to a T. But I want to get into some of the nuts and bolts here about just the basics of the trading plan and what I would recommend any client or any one of you who are either new to trading or even if you've been trading for a while and you never really stopped and thought about making a plan or you didn't know where to start, I guess this is definitely a good refresher to help you out and maybe get things organized a little bit. So a few of the topics, a few of the things within a trading plan, a few key points that I find important is reasons why it's important is to you got to be able to adapt, to the market, and being able to adapt is very key because it's always changing. So your trading plan has to be able to adapt to the different trends and different markets out there. A couple other things you want to do is you want to have rules so if you should be trading or if this is a time when you should not be trading. Another one of the important parts of having a plan is it's knowing what your risk is. I cannot stress how important it is to understand your risk. And it's not understanding your risk as broad as, as of just one trade or changing it here or there. You got to have a plan no matter what you're working with. And everybody's different. But you have to have a plan set forth on every single trade that you're in, either options or futures, of what's the amount of risk that you're going to allow yourself to take before you call it quits. Before the margin call comes up, and that's the first heads up slap in the face where you're saying, well, maybe I didn't control my risk well enough. You shouldn't be in those situations if you have a soundproof plan. Of course, there's going to be times when maybe you're in the market and maybe you're trading by yourself and the gold, for example, how it fell the other day. You might be on the West Coast. You might get up and find out it's $70 lower, $80 lower, and that's something where hopefully you had a risk plan intact if it's orders as far as stops, or if you had someone you were working with that understood what your plan was and helped you to create a plan of attack for every trade. So let me get into a little bit of it here with you. I'm going to start with the first thing. If I was creating a trading plan, I want to look at just the basic. I'm going to recommend to people is the skill assessment. The skill assessment is sort of two parts here, and it's very important because there are people who trade on theirself, who trade by theirself, where you need to make sure you have your certain things, you understand how certain things work, and you have a system that you've maybe paper traded or you've tested and you feel comfortable with using it and knowing how to adjust it. For someone who's never traded, going into it, like just jumping into it with no plan of attack and not having any understanding of how the markets work can be very dangerous. That's why sometimes I would highly recommend if you're starting out in this, and not if you've done stocks before. Commodities is a completely different world. This is something where if you're starting out in it, for someone to help you understand how things work in the market, you don't have to be in the market off the bat. You could work with someone, and generally I've done this with a lot of clients, and they've been around for a while, and they're doing very well. But we started out very basically, and I help them understand different things, different parts of the markets, and meaning timing. When's the time to get in, time to get out? What's a good profit? What's a good amount to risk? Help them build skills to sort of understand how to manage their trades in the markets. every person is different, but if you have any questions with as far as with individual timing of trades, things of that nature, feel free to get in touch with me, because I can help you out and at least give you a basic understanding of a few points that you could use in your own trading plan to help you create one. The next part of the plan is and literally this is important. It sounds crazy, but you want to have you want to be mentally prepared when you're going to trade futures. Again, I can't iterate this more. This is not, stocks and futures are two totally different trading styles and systems. Futures carry more risk, and they can move within a snap of your fingers. So, being mentally prepared to execute the plan and execute the risk, and being mentally prepared to control your greed when you get into a trade and it's going in your way, and being able to understand that, hey, if I get out here, I'm walking away up positive X amount of dollars. That's a good trade. If you come in distraught into the market, if you come in on the day and you're just overwhelmed with something else going on in your life, you're not gonna be prepared to handle the market most of the time, especially when the market is a volatile market. And if you're doing more of a shorter term strategy, being from day trading to trading for 2-3 days in one future trade, or if you're trading for anywhere within a week, week and a half, you need to be prepared so you don't make an error and cause yourself to take on more risk than what you should have taken on. So mentally preparing yourself each day, you need to set guidelines which you need to stick by, so you know that you don't get involved with the market the days that you're not going to be able to handle the pressure, because there's going to be a lot of pressure. Let's get to the next point here. This is risk level is a very part of if you're building a trading plan. And again, everybody's trading plan, obviously most people are working with different amounts of money and etc. So risk is a little bit different. So no matter what, there's one way you want to look at it. It doesn't matter if you're working with $10,000 or if you're working with $10 million. There's one way you want to look at it. You want to look at your account as a percentage, 100%. Hands down, keep it flat, 100% of the value. Now, every day you got to have yourself, you got to set up, and you got to understand that, okay, every single day I'm going to risk, X amount per trade. That's my max risk, and again, that's going to tie in with your skill level of timing your trades and understanding when to get in, which I will touch on more in the next series, which is next week. But for now, understanding your risk per trade. Generally, anywhere between 1% to 5% of your account value should not be risked on any given, at the most should be risked, per trade. What I generally did in the trading plans that I have created, that I use on a day-to-day basis, is I stick by 5%. I have the trading that I do when I trade, I have levels that I'm waiting for, that I've already set out, that I've been looking for, and I have orders waiting to get in. So I'm not hopping in at the moment and then trying to figure that all out right away. I have orders waiting, and I have my risk. I look at my risk right away. If I see a trade that looks great, the first thing I'm going to look at before I look at the profit side is, what's my risk on this trade? Well, 5% is what I'm going to risk for the day. So generally, 5%, you don't want to try and put everything on one trade. If your timing is tied down and you're picking your areas okay, when you get in trades, they're not all going to go exactly the way right off the bat you get in and it goes your way. You might have to take a little heat. That's part of the skill level, picking the areas, understanding where you're getting in and why you're getting in. But overall, if you go past, let's say you make 4 trades per day and you're a day trader and you've lost 5% of your account, at that time, there's no questions asked. You need to stop trading. You need to turn your computer off. And you need to leave and walk away and don't trade for the rest of the day. That's another very important part of trading, because once you get in the mentality of where you've lost money, this is just like how do I describe it? If some people actually that don't understand risk take it like gambling, and what they end up doing is they stop investing. And when they stop investing, they start gambling, and then they lose all control of their risk. And that, bottom line, is the worst thing that could happen to you, because you're most likely not going to ever get ahead at that point. So 5% risk per day. Let's say you lose 5% of your account value on Monday. Come Tuesday, I would recommend you start with your next risk level overall is 4% of your account value. 4% is what you're going to stick to for the next day, as long as, if you can, that second day on Tuesday, if you could end up being positive for the day, then you go back to 5 for Wednesday. If on Tuesday you have another day where you hit the 4% and you're 2 days down, the third day I'm gonna go in and I'm gonna start with 4% again, and I'm gonna try and work my way back. That's if I'm mentally prepared to trade that day. You don't want to revenge trade on when you're already working with tighter risk. You want to make sure you have a plan intact. So that's given you're in that day because you see a trade, because the skills you had to pick the spot and everything looks good. And if you could come back that day and make back at least end the day profitable that day, then you can move back to 5%. Everybody's different on how you judge it. But again, you don't want to go over the 5%. That's very important. I stick to that. That's what I was taught, and I think it's helped out a lot. And again, understanding your risk every trade. You should look at and understand your risk before you look at your profit objective. I can't stress how important that is. Let's go to the next part here. Setting goals. In your trading plan, and the other thing too is I have an actual trading plan built with an Excel and Microsoft Word. And again, everybody has their own plan, but it's a simple format you can follow. And I don't have it in here, but tomorrow, or tonight, you guys want, you can email me, and I can send one out to you guys. And then if you want me to sort of go over it with you and incorporate it into what you're trying to do, I'd be more than happy to do that with you. Let me know. But again, setting goals is a huge part of it too, because when you set goals, when you start out trading with your plan, you have your risk, and everything that's followed this. Your goals are going to be, important to every 2 weeks at first, or if it's, every week, you're going to look back and see where you're at before you move forward with more contracts. You don't want to jump in and go to the max right off the bat, and then then things aren't going the right way. You need to work yourself forward. You need to start simple and work your way up. As your count is growing, as you're hitting your goals, then you move forward. You move forward in the amount of equity, you're using. You move forward on the sizes, how many contracts you're doing per trade, and maybe you move forward onto expanding into other markets as long as you can stay focused on with what you're trading. It's key to have your goals. I guess this is very common and very easy to understand, but it's an important part of the plan. You need to have goals of where you want to reach, where you want to be at the end of the quarter, each quarter, at the end of the year, and work to try and meet them. But you got to have a set plan of how you're going to get up step by step as you grow, and expect the months where you're not going to come out ahead that month, maybe because your risk was 5% for too many days, and you ended up calling it quits for 2 weeks. Hey, that's fine. That happens. You don't want to be in the revenge trading, so you should. That's why that risk plan is there. It's there as a last stop to say, okay, hey, enough's enough. Wait, move on, come back another day. Again, goals. Everybody's different. It pertains to what you're working with and what you're looking at, what market you're looking to start out with. But that's something I could walk through with you if you have any questions. It's definitely one of my favorite parts as far as trading is hitting my goals, and I can tell you that it's very enjoyable. So if you have any questions, let me know. Almost done here. One of the last parts here I have is doing your homework on the market. almost one of the last. Doing your homework. What means is doing your homework every day, and it's part of your plan is understand what's coming out that day. What numbers are going to be coming out that day? If you're trading the crude oil, is there crude inventory numbers every Wednesday at 9:30? Doesn't really change unless there's a holiday and it gets moved up a day. But usually they're consistent every day at the same time unless there's a holiday. Reports. What's going to affect what's going to be in your way today as far as if you're in the market and there's something coming out that's going to affect that market. What markets have numbers coming out maybe that if they get caught up in something from a number, how is that going to affect the market that you're in? These are things that you have to look at. You need to do your homework on the trade. If you're working with someone who can help you with that, then yeah, that makes it a little easier to have somebody encapsulated to you. But that should be part of your plan. You know, in the morning, if you're going to trade that day and somebody's going to tell you, you know, hey, I really like this trade, and you know, we've been talking about this setup coming for a while. It's here, so hey, we're going to get in, and you know, what we have to be concerned with is possibility of A, happening, this number coming out. B, if this market's about to break. Well, if this breaks, then we know our market's going to go with it. So, you know, understanding that is very important, and how to control that, and if it's worth getting in that day, or if you're already in, if it's maybe worth taking your profit, or how to balance your trade at that point. So, you know, understanding what's ahead of you for the day is very important part of each day of trading, and understanding that in the morning. Obviously, things change with trading very quickly. The markets change very quickly. So, you know, if you have your grasp on what's going on and what numbers are going to come out, it's going to make it a lot easier on you throughout the day, so you don't get thrown off by too many surprises. Next one right here ties in back with a few of the previous slides that I had up here, and it's set exit rules. This is probably one of the hardest parts of the plan, I think, that I've seen clients struggle with, and it's when to get out of the market. When do you get out of a trade? For being on the positive, when you're making money and when you're losing money. People struggle with this. I don't understand 100%. I mean, it's emotional. It's you know, it's every one of us is greedy. Everybody has greed in you. It's how you can control it, and this is how you control it with having rules in your plan established to call it either quits on a losing trade because it's at the 5%. Hopefully, you see something before it gets to the 5% that gives you the signal to get out. But you need to set these exit rules because it's important. You got to remember, any trade that you get out of with a profit, obviously everybody wants to make more money. I understand that. But if any trade you walk out with a profit, you're not going to be upset when you go to bed and you've made a profit. You're not gonna roll over at night and not be able to fall asleep. If you are in a trade that's going against you, believe me, you're not going to sleep at night. You're going to roll around. You're going to think about it. Markets don't sleep. Markets are up. Markets are going almost all day, every day, except sometimes on the weekends there. There's a lot going on, so having your profit objective, having your risk is just as important as having your risk level. So, when you get into a trade, if you're doing it yourself or if you're working with someone, you want to look for, okay, we got in at this spot, it came here. So we know that if it gets below us here, that's our risk. But now on the upside, what are we going to look for? Okay, well, this is something that's always going to be adjusting because, obviously we want to get to this target, let's say target up 50 points up here is what we think the market's going to get to. That's where it looks like it's going to go up to and struggle. So let's try and get a profit objective there. If you don't like using a profit objective because you just don't want to cap yourself on your winnings, then you've got to implement some sort of exit strategy that sort of is a trailing stop, but you need to stick to your guns on that. That screws people up the worst. So you've got to have exit positions with the risk and exit positions with controlling your profit involved in your plan. That's something that's, again, everybody handles different, but I would be happy to show you, depending on sort of what your approach is and how you're looking to approach the markets. Last but not least here, we got the keep records. this is something which is very key, and I'll tell you why. And this ties in with what I think is going to happen in the market in the very future. Keeping records as far as when things happen, like the FOMC meeting, for example. I did a webinar last week, and right before the FOMC, and you can go back in the archives and listen to it. And it was I spoke about how the day after the FOMC was when we really see the market start to really move. And I said that the gold, which was showing us it was heavy, I think was going to really chop the day of the FOMC, but possibly I thought it was going to fall that day. It worked out the way that I thought. And how I knew that was because of the records that I keep on. The FOMC is one of the biggest numbers with unemployment. When with my records going back, however many years I have it going back, comparing like gold on the FOMC days or on the unemployment days with the stocks, you'll begin to see patterns, especially if you're technically looking at the charts and if you're looking at patterns that are in the charts. Right now, one of the patterns that I have in the charts that I picked up on for what I think is going to be coming tomorrow in the metals, especially, or in the very future, is something that I've kept records of for the past 10 years on, and that's looking at every time precious metals go coming from a new high, turn finally into a bear trend. What's that initial down spike like, and how many times does it take it to break to that bottom? That's a pattern right there that's something big enough to where I'm keeping a record on, to where that's going to directly come in and help me tomorrow or very soon hopefully get in the market, set my trade objective off the plan that I'm creating, and hopefully execute everything in the way that I plan on it, and pulling out and being profitable. So if everything goes as planned. But if I'm wrong, I have my risk set, and I won't be risking past a certain amount. Again, everybody, when it comes to trading plans, it could be different depending on your approach, long-term, short-term. Again, risk is generally, look at it percentage-wise. 5%, nothing over should be safe enough. Again, as long as you're picking somewhat decent trades. If any of you need help with it, or if you'd like me to email you a copy of a specific trading plan, I have a couple trading plans that I would be glad to email you tomorrow. Just sort of the setup of it with Excel and some language to help explain, with the example of how and why things are where they're at and how I'm judging certain things. So again, if you have any questions, definitely feel free to email me. Next week, we'll be getting into, following Tuesday, we'll be getting into a little bit more on trading and at the education part of the markets. So I encourage you to stop by and listen to the webinar. It's the same stuff that you go and you pay from all these teaching academies and trading academies, etc. But it's free here, and if you need help after, you email us, and we'll be glad to help you. Have a great day, everybody, and have a good week. We'll talk to you next week. Thank you.
It doesn't look like we have any questions today. Again, if you'd like to contact him, just use his contact above. If you'd like to get an email of that trading platform he's talking about, that trading setup plan, go ahead and shoot him an email. He'd be glad to shoot that over to you tomorrow. Again, you can find this archived on letstalkfutures.com. If you're interested in trading futures with Tim, we do have a special offer of half-off commissions for 30 days when you open a new account. You can join us again. Tuesday is going to be our next webinar here, again with Tim, and he's going to kind of